In this video, I am going to show you how you can double your money with 3 simple steps. We will also discuss the widely adopted proven investment strategy. Let's dive into the step number 1. So step number 1 is the understand rule of 72, which will give you the blueprint on how you can double your money. So rule of 72 gives you the time which will needed to double your money with a certain rate of return. For example, if your investment gives you 1% rate of return a year, then it will take whooping 72 years to double your money. It's very likely that you might not be here to use the money either. So what you can do? You can reduce that time in half by getting 2% rate of return. You can further reduce that time in half by increasing the rate of return to 4%. On the screen, you can see the table of 72, which will give you the exact time which will be needed to double your money with a certain rate of return. As you can see, up to 10%, the table gives you fairly accurate time which is needed to double your money. However, beyond the 10%, it is less accurate. You can take the screenshot and refer it later in the future. So after understanding the rule of 72, we can proceed with the step 2. So from the rule of 72, we understood that we have 2 variables to play with. One is the time and second is the rate of return. So now we have the 2 options. Option number 1, we can double our money in a longer period of time with lower rate of return. And option number 2, we can double our money in a shorter period of time with high rate of return. So which option you would opt for? Let me know in the comment section. Obviously, you will say option number 2. Everyone will opt for the option number 2 as they want to double their money with shorter period of time, say 3 to 5 years. However, we must acknowledge that to get a higher rate of return, we have to take certain risk. High growth of investments will certainly be more exciting and more volatile at the same time. So let's see how investment guru Warren Buffett created his wealth. It's very interesting, as you can see from the graph, that most of his wealth is created after the age of 60. It's simply the magical result of compounding interest. So what do you think? Which option worked for Warren Buffett? And how much risk he would have taken? So how much risk you should take? So that depends on your circumstances, including your age, when you will need the money and when you are retiring, etc. Say if you are young and you don't need the money very soon, you can invest in certain risky asset classes to get the higher rate of return. So now you have to decide which strategy will be suitable for you according to your circumstances. This brings us to the final step on where you can invest your money and eventually double it. So here you can see the asset classes where you can invest your money. Remember, diversification and asset allocation are keys to the successful investment strategy. To know more about these asset classes, you can check out my previous videos here, or you can find the link in the description. For example, let's consider you want to invest in equity, which includes stocks and ETFs. How much time it will take to double your money? Let's check the historical data on how stocks and ETF performed in the past, which might give us some idea on how it could perform in the future as well. So let's take a look at how S&P 500 index performed in the past. As we can see, from 1982 to 2022, which is about 40 years of period, S&P 500 is up shy to 3900%, which means if you had invested $1,000 in 1982, you would have almost $39,000. Let's check how the Dow Jones and Nasdaq performed in that period as well. So as we can see, the Dow Jones is up about 4,000%, which is almost similar to the S&P 500, and the Nasdaq is up about 7,474%, which is pretty decent. I would also like to show you the tool to check the returns from the S&P 500 for any period of time and how much you would have made in that period with the investment of $1. For example, for the last decade from January 2012 to December 2021, the average return was 14.83%, and true CAGR, which is compounding annual growth rate, was about 14.24%. So if you had invested $1 in 2012, you would have $3.79 in 2022, which means you would have almost doubled your money twice in a 10 years of span. We can also validate that with the rule of 72. With 14.24% return, it would take around 5 years to double your money. So simply investing in low cost S&P 500 index ETF could double your money in 5 to 8 years. However, asset allocation and diversification is far more better approach for the successful investment strategies. Thank you for watching the video. Please do like, dislike, comment, share and subscribe the channel to get more videos on personal finance. This video is just for an educational purposes and please do not consider it as any recommendation.